welcome back, real estate investors. Whether you're a reluctant landlord or you consider yourself a seasoned real estate investor, we're going to continue on with the economic data. Now, if you missed the first portion of this video, which is going to include all of the sales data, you definitely want to go back and check that out. These are going to be cut up into their own segments, so you can watch each one individually, or of course, you'll always have the ability to watch each one in its long form in its entirety. So we want to make this as convenient as possible for you, and you can catch all of these videos on all of our social media channels, as you know, which is Facebook, LinkedIn, Instagram. If you're not into social media, you can always find this information right there on our website under the Watch and Learn tab. But without further ado, we're going to jump into some market data here for the Indianapolis area. And what we're going to do is I'm going to highlight some surface level information for the Indianapolis and metro area. And then I'm going to leave it up to Mike here, who's done a little bit more of a deeper dive into the submarkets and what's going on specifically in these markets that might have an impact on your real estate investment. So, Mike, if you're ready, I'm going to dive in.
Let's do it.
All right, here goes some boring numbers, but important numbers nonetheless. But here's what's happening in the Indianapolis area. Rising rental rates. As of November 2024, which is the month that we're currently reporting on, the median rent in the Indianapolis area has increased to $14.35 per month, which is up $86 from the previous year. This upward trend indicates a strong demand for your rental properties here in the Indianapolis and surrounding communities. The occupancy rates here in the Indianapolis area, as we all know, is great. And this is what drives investor activity to the Indianapolis area year after year after year. In the third quarter of 2024, more than half of Indianapolis submarkets reported occupancy rates above 94%. Now, I gotta admit, this number even shocked me. But with some areas exceeding over 98% occupancy rates, and that's amazing. That speaks to incredible tenant retention, which obviously reflects a robust rental market with limited vacancies. So, and that's gonna speak a lot to my next point here, which is the population growth that's happening around the Indianapolis area. So the Indianapolis metropolitan area continues to experience population growth, which supports sustained demand for rental housing. But I know that you're already in tune with that. The economic resilience that's happening here in the Indianapolis area. So despite national economic fluctuations that everyone's talking about on your local media channels, Indianapolis maintains a diverse economic base, contributing to a stable job market and consistent demand for rental properties here in the Indianapolis area. Now, last but not least is the affordability advantage, which again is what drives investors from the East Coast to the West Coast to invest here in the Midwest, the affordability advantage. Indianapolis offers rental rates approximately 29% lower than national median, attracting renters seeking cost-effective housing options and ensuring a steady tenant pool for investor. 29% lower than your national average. So if you're looking for an affordability place to live, when everyone's talking about inflation everywhere else, the Midwest is exactly where you're looking at affordable housing. Mike, your turn.
Yeah, no, I love it. I will say, I do want to just put a plug in for our own market reports, because those stats are good, but I think what we do is awesome. We slice and dice the data so much more and get so much more granular. So stay tuned for our market reports. Those are coming up next. You can click on a link to get to them, but we do all Indianapolis by itself. We do the submarkets, and it's really interesting to see that data changes quite a bit when you look at the different markets as taken apart from one another versus just kind of the Indianapolis metro as a whole. So anyway, I just wanted to mention that those are coming up. Let me just jump in with a couple of news articles that are recent that either highlight an area or just kind of like see what's coming down the pipeline. So anyway, let me just jump into it. I'm going to kind of go fast and furious here, if you're okay with that, Chris. Just going to maybe just read the headline, maybe a sentence or two. We could chat about it, but I just want to get the news out there so everybody knows what's going on with the kind of the central Indiana market.
Yeah, it's exactly what this is designed to do. Highlight some of the boring stuff, but how is it going to impact my investment here in the Indianapolis area? Yeah, rattle away.
Cool. Coming off of the heels of our other video that we just did on the sales data, I got two here. So Central Indiana existing home sales surge 9%, inventories grow. So closed existing homes in the 16 county area rose 9% on a year-over-year basis, up from 23 homes in October of 23 to 35 homes in October of 2024. Sales have now risen in 4 of the past 7 months on a year-over-year basis, following a 26-month streak of declining sales. So we saw this where there was lack of sales because there was such a lack of inventory. We're starting to see inventory hit the market, and then therefore sales hitting the market. So I think we're going to see a little bit of a more balanced market this year.
Absolutely. Yes. Yeah. You say more of a balanced market. When you say balanced market, are you speaking more to the sales side or more to the
Sorry,
rental
yes,
side?
to the sales side. Sorry, it was.
Okay.
Yeah, thanks for clarifying. Yes, to
No,
the
I
sales
just wanted to make sure. Yeah, I mean, if you're ever wondering if I know what I'm talking about, just look at this peppering that's happening here. I mean, this is a
side.
guy who knows what's going on. All right.
I got some similar stuff going on here.
No, yeah. So to the sales side, I mean, and we're going to argue about this. I just know it, and I know the viewers are going to love it. But it's you say balance. I believe that we're headed towards more of a buyer's market. So I can't wait to see. So we'll see how long we stay in the balanced area.
Cool. Also on that, so that was existing homes. Kind of a similar story on new homes. Applications for new homes. New homes jumped 29% in
Wow.
Central Indiana. Central Indiana
Wow.
builders continue to see a surge in business. Builders filed 874 single-family permits in the 9-county area, which represents a 29% increase compared with the same month over 2023. So we're seeing the same thing on new home sales as well. So demand is definitely still out there.
That's
Um,
interesting.
Maybe I'm going to just dive into a couple submarkets that we talk about on these videos. I got 2, and I'll just touch base on them real briefly because they are just like proposals. But I love the Westfield market, and I think it's a good long-term play. Last month in our market report, we had some shaky news, but this is to me just representative of it's a good long-term play. So there's two news articles here. So Westfield City Council hears a new $1.2 billion plan for a Grand Universe development. So this is it's just east of the Grand Sports Complex, a project that has been in the work for 12 years. It's a 66-acre thing. It's between 186th and 196th Street, and it would be four distinct districts for science, technology, engineering, and Earth-related installations involving rockets, rocket boosters, engines, and outer space. I mean, that
Wow.
is cool. That is a $1.6 billion. That is crazy.
Did I just hear Elon Musk is coming to town?
Right?
He might stop by. No. In all seriousness, I'm glad you're reporting on what's going on in Westfield, and I know that we have a ton of Westfield investors that are currently under the Red Door umbrella, and this is information that you have to be staying in touch with because there is so much inventory that is currently on the rental market in the Westfield area, and if you're already under our umbrella and you're receiving your market updates because you currently have a vacancy in the Westfield area, you're already completely in tune with what's going on
Yeah.
because we've made it essential that our leasing team update you with the inventory and the price reductions that are necessary in order to place a tenant quicker or ahead of the competition, because that's absolutely what's necessary right now.
Yeah.
Unless you're okay or comfortable, which I don't know anyone who is, with having vacancy for the next 3 months, you've got to get ahead of it. Your ability to cash flow is probably not going to be there. But what Mike has just mentioned is don't panic. There's a lot that's happening in Westfield. Your appreciation play is huge. You're probably going to be squeezed a little bit here in the short term.
Yep.
The important thing is to stop the bleeding, make the rent reduction quick and early, because all of your competitors in that market are going to have to do the exact same thing if they want to place a tenant. It just is going to take them longer because they're not in tune with the information that we're putting out here right now. So make the reduction now, stop the bleeding, and ride this out. I mean, things could change even as early as spring or summer, in my opinion. But the inventory is high in the Westfield area. So to wrap that up, don't panic. Things are happening. Westfield is a great area to be a part of if you're already in the market.
It seemed a little bit of doom and gloom to me, Chris.
Well, I mean,
Lots of talk about bleeding.
It's the tough conversations that you have to be willing to have. Whether this isn't all. We're not doing this to just portray all rosy information. This is to keep you completely informed. And sometimes, believe it or not all that information is going to be great. But the point is that there's light at the end of the tunnel thanks to the Economic info
I was
that
going to save the doom and gloom for the market report, but we'll just get it out of the way now.
all right, please continue. It's your show here. Let's go.
All right. Well, we got the grand universe, but to your point, though, Chris, the next one I have is more inventory hitting the market in Westfield. This is actually just hot off the presses. This came out about an hour ago. Indianapolis developer CRG is proposing a new plan to complete a long discussed project along US 31, which includes 366 apartments, 60,000 square feet of medical office space, 12,000 square feet of retail space, and 447 parking spaces. So more inventory in terms of apartments, not necessarily a huge competitor for single family. I feel like that's a different clientele. But again, just goes to there's so much building, there's so much activity going on out there. That's really what I wanted to highlight with the Westfield. And to reinforce your point is Westfield is a long-term play. It is a 3 to 5 to 10 year buy. You're going to be safe. There's so much activity out there. There's so much development out there. That's what I wanted to highlight with those.
Yeah.
Kind of on that same note, Fishers pumps new life into the aging Allison Road corridor. And so if you guys are not from here, so Fishers has had a ton of development, but it's always been on the east side of Fishers, and the west side, kind of the older side of Fishers, has kind of been a little bit neglected. It's a little bit run down. You know, the strip malls are kind of old. Anyway, they are looking to change that. So the intersection of 96 and Allisonville looks a whole lot different. Do you ever been up there? You do that Michigan left thing. You know what I'm talking about?
Yes, I know exactly what you're talking about. I'm up there all the time. Yeah.
It's gone. Did you know that? They
No, I didn't know that. Apparently, I haven't been there recently.
I just avoid it because that whole thing is such a disaster. So I try to avoid it as much as I can. But that's gone. It's now a roundabout.
Wow.
Yeah. So they're totally dumping a ton of money into there. So the despised Michigan left, which annoyed motorists for more than a decade, is gone. It's now a 2-lane roundabout. Residents are moving into apartments for $135 million River Place development.
Wow.
It's being developed on an 83-acre site for years, and then the city will soon be transforming 125 acres adjacent to the White River into Fishers White River Park. So they're really committed to developing or redeveloping that west side of Fishers, which has been neglected. Again, that might be an opportunity for an investor looking for an appreciation play, because the east side is where all the construction and all the new housing is going. But if you can get into the west side before this kind of gets redeveloped, I can definitely see an appreciation play there for an investor.
Yeah, that's great. And the one thing I think Fishers is lacking, because of all the development that's been happening in that area, is really good investment into the parks, right?
Yeah.
Because a lot of people that live in the Fishers area, I mean, the trend nationally is outdoors, right?
Yeah.
Outdoor activity, and that's the one thing that I think Fishers is a little bit lacking. It hasn't kept people out of the Fishers area, but I think development into their parks is going to bring even more people to that area. Now, one interesting thing here, and we can move on here because I know the idea here is to keep these short and sweet, is the multifamily. There seems to be so much money being poured into multifamily, not just in Fishers, but you also indicated there in Westfield.
Everywhere.
What kind of impact do you think that this is going to have on your single family residential homeowners? And the reason I want to bring this up is a lot of the conversations I'm having with active investors, I'm meeting them at their property, and so commonly they're comparing their property to a multifamily across the street. Well, that property across the street, they're getting $1,400 per unit. Why my single family, being single family, should be able to achieve $2,000 a month, right? It's not multifamily. Do you think that those two things relate to each other? And let me share my opinion first. I do think that they relate to each other only to a small degree. I think it's a different type of individual that's looking for your single family homes that's rather than that's going to be looking for a multifamily residence. What kind of interaction do you think that those two markets might have?
I think there's some overlap. I do think that there's people who are interested in multifamily and people who are not. I think it trends towards younger people.
Yeah.
But I think that there's not even in Indianapolis, just nationwide, there was kind of a mad rush for multifamily because there was so many articles about how, oh, we're so short on housing. And then, with the zero interest rates, everybody raced to put up these multifamilies. And, this is opening now. That had to start 3 to 5 years ago, when interest rates were zero. So, there's a lot of talk that, we still actually have some trouble ahead on the commercial real estate side because of interest rates resetting and all of that. So kind of a long-winded answer. I do think they are somewhat related, but I do think that a lot of people don't want to be in a multifamily home.
Yeah.
You know?
Yeah, I think so. I think so too. I'm going to ask this question. It may be a difficult question to answer. So if across the street they're renting for 1,400, and I've got a 3-bedroom, 2-bath, 1,600 square foot, 1,500 square foot across the street. I'm thinking that single family home might rent for 16. These numbers mean nothing, but this is just for fun. 1,600, maybe 1,650. If I'm running just off the one comp across the street. Again,
Yeah.
these numbers mean nothing. Your thoughts? Just curious.
Again, I think at a certain point, it's going to make sense where financially you go, oh, well, hey, I'll live in a multifamily. I'll make that sacrifice. But again, I think there is a premium to be paid for multifamily for somebody who wants that. If there's somebody who wants the amenities of a new multifamily, they want the gym, they want the pool, all that kind of stuff that comes with it. That's just a different subset of renter.
So glad I asked. Okay, so you're indicating a premium for the multifamily because that individual is going to be pulled in that direction because of the amenities that are going to be provided by that multifamily.
Yeah.
Yeah.
Because of the yard, because it's just a little bit more family friendly, things like that. Yeah.
Okay.
Yeah.
All right. I think that's going to wrap up our economic data here for the Indianapolis metro and surrounding areas. If you have any questions on any of this information that we've laid out here today, jump into the comments. We'd love to hear from you. Jump into the chats. Love to hear what you got to say. Or if you know of some development, maybe that you're involved in here in the Indianapolis area, we'd love to hear about it. We'd love to report on it as the months go on. Be sure to stay tuned. Again, whether you consider yourself a reluctant landlord or an active investor here in the Indianapolis area, this is information that you're going to want to stay tuned. Now, we're about to jump into the market reports, which is the meat of all this information. I love the market report data that we're releasing every single month, and I know that you do too. So stay tuned for that.